You ever pull up a stock chart and just stare at it, feeling completely lost? Well, today, that's exactly what we're going to fix. We're going to take this totally blank chart of the Spanish IBEX 35 index, and together, step by step, we're going to learn how to read the story it's telling us. So yeah, let's dive right in. All right, so you open up a chart, could be anything, a stock, a currency, whatever, and bam, you're hit with this. It looks like a total mess, right? A chaotic sea of lines and bars. And I think for anyone just starting out, the first question is always the same. Where do I even start? It can feel so overwhelming, but I promise you there is a method to this madness. Okay, here's our game plan. It's a simple 5-step roadmap to take us from total confusion to, hopefully, a lot more clarity. We'll face that blank chart, start with a long view, draw some lines and zones, spot some patterns, and then, you guessed it, put it all together. All right, section 1, facing the blank chart. Now, before we even think about drawing a single line, let's get one thing straight. Our goal here is not to predict the future with 100% certainty. No one can do that. What we're doing is learning a process, a repeatable method, for making an educated analysis on any chart you see. Okay, section 2, start with the long view. And this is probably the most important first step you can take. Your very first move should always be to zoom out. I mean, way out. Before you get lost in all the day-to-day noise, you have to see the big picture. It's kind of like looking at a map of the entire country before you try to navigate a single city. We need that historical context. And when you do that, when you zoom out to a monthly chart, all of a sudden decades of what looked like chaos start to look like a simple story. You can see the major chapters unfold, right? There's the 90s bull market, the dot-com bubble bursting, the recovery, the huge 2008 crisis, and then this long recovery phase we're in now. See, this context, it's everything. All right, now that we have our historical bearings, it's time to start adding some structure to this chart. We're going to bring out the basic toolkit, just 2 fundamental tools that every technical analyst uses. And trust me, these simple lines and zones are going to start making this all make a whole lot more sense. First up, the trend line. It's as simple as it sounds. In a market that's generally going up, all you're doing is connecting the dots. You find the major low points, the dips, and draw a line connecting them. You'll see that each low is higher than the last one, and that one simple line instantly gives you the direction and the momentum of the trend. Easy, right? Okay, next up, we have support and resistance. And you really want to think of these as zones, not just perfect lines. So support is like a price floor. It's a level where the price has come down to, and historically, buyers have jumped in and said, nope, not going any lower, and pushed it back up. Resistance is the opposite. It's a ceiling. Price gets up there, and sellers take over and knock it back down. These are basically memory zones for the market. Now, here's a really crucial point. These levels aren't permanent. And this is where it gets interesting. When the price finally breaks through a resistance ceiling, that old ceiling very often becomes a new support floor. That flip-flop is an incredibly powerful concept. We call it a pivot zone, and it's something you absolutely have to watch for on any chart. All right, section 4, spotting reversal patterns. So we've got our lines, we've got our zones. Now we can start looking for something a little more advanced. Chart patterns. Think of these like recognizable formations, shapes that tell a story about the battle between buyers and sellers. And sometimes they can give you a huge hint that the entire trend is about to change. So one of the most famous reversal patterns out there is called the inverse head and shoulders. And honestly, it kind of looks just like it sounds. You get a low point, that's the head, and it's surrounded by 2 slightly higher lows, those are the shoulders. The key thing to remember is, when you see this shape forming at the bottom of a long downtrend, it's a really powerful signal that things might be about to turn around. And would you look at that? Right here on our actual IBEX 35 chart, playing out over 5 years, is a perfect textbook example. I mean, you can see it clear as day, right? The left shoulder, then that super deep low from the crisis forms the head, and then the right shoulder. The fact that this pattern was forming was a huge signal that that brutal 5-year bear market might finally be over. But here's the really cool part. These patterns aren't just pretty shapes. They actually give us a measurable target. You can take the height of the pattern from the head up to the breakout level and project it upwards. In this case, it gave analysts a potential price objective, a minimum target for the IBEX 35 of over 11,500. Okay, so let's recap where we are. We've gathered a bunch of clues, right? We've looked at the long-term history, we've drawn our lines and zones, and we've spotted a huge reversal pattern. The final step, section 5, is putting it all together. This is where we act like detectives and synthesize all this information to build one single coherent story about what the market might do next. And here it is, the whole process laid out as a simple checklist. It's really not that complicated when you break it down, is it? You can see how each step just builds logically on the last one. We started with a confusing blank chart, and now we have this multi-layered analysis where every piece of evidence points in the same direction. That makes for a much, much stronger case. So if we had to boil it all down to one single sentence, what's the takeaway? Well, it's this. We have a 5-year downtrend that's been broken. We have a major support zone that's holding firm like a floor. And we have a giant reversal pattern with a bullish target. When you put all that together, the weight of the evidence is pretty clearly pointing towards a more positive, more bullish outlook. But, and you have to listen to this is maybe the most important part. A good analysis is never about being 100% certain. It's all about playing the probabilities and managing your risk. That's why you absolutely must have an invalidation point. It's your I was wrong level. It's the price that tells you your whole idea is busted. For this bullish view, if the price were to drop back below 8,500, that would be the signal that the analysis is incorrect, and it's time to step aside. Now, obviously, what we've done here is just the beginning. There's a whole other world of tools you can add. The next step in your journey would probably be to look at indicators. These are tools that help measure the momentum of a trend, and they can help you spot when a market is getting overbought or oversold. Basically, when it might be getting tired and needs to take a break. Okay, so let's wrap this all up. What are the key takeaways? Number 1, always start with the big picture. 2, use trend lines and support/resistance to give the chart some structure. 3, look for patterns, because they tell a story about major trend changes. 4, combine all your clues to build a single market view. And 5, the most important one, always, always know your invalidation level. So there you have it. We took a blank, really intimidating chart and we turned it into a story with structure, with context, and a clear set of probabilities. And the best part is you now have the fundamental framework to start doing this yourself. So the next time you pull up a chart, don't just see a bunch of random lines. Ask yourself, what story is this chart trying to tell me?